Today we're talking about that volatile market everyone's buzzing about. You know, Q3 2025 saw the S&P drop 5 to 7% from those July highs, shaking out the weak hands. But pros? They see volatility not as a bug, but a feature, a chance to buy low. I crunched the latest 13F filings, submitted around mid-November for holdings up to September 30th, 2025. These aren't day-by-day trades, but they reveal what the whales did in that July to September window. And trust me, it's eye-opening. All right, let's get to the meat. We'll walk through top investors, their Q3 buys, why it's smart, and beginner tips. Starting with the Oracle himself, Warren Buffett at Berkshire Hathaway. He snagged a brand new stake in Alphabet, 17.8 million shares worth $4.3 billion, about 1.6% of his massive $267 billion portfolio. This is Buffett dipping into tech during a dip, which surprised me at first because he's all about value. But think about it. Alphabet's got that unbreakable moat with AI and search. Purchase period? Q3 2025, July 1st to September 30th. Why smart? Volatility handed him a 20% discount on future growth. I remember back in 2022's crash, folks who bought the fear are laughing now. Next up, George Soros and his Soros Fund Management. He cranked up Amazon big time, making it his top holding at 8% of a $7 billion portfolio. Plus, a new stake in Vimeo, 2.85 million shares for $22 million. He added 77 new stocks but dumped 95, sharpening focus, all in Q3. Now, Ray Dalio at Bridgewater Associates, his portfolio ballooned to over 1,000 holdings worth $50 billion plus. He boosted Netflix by about 20% and pivoted defensive with Verizon. Implied semiconductor plays like TSM2, while cutting megatech like Nvidia and Microsoft. Q3 action purchases only. Dalio's all-weather strategy balances growth in streaming with stable telecom dividends. Verizon yields around 5%. Next, Carl Icahn, the activist legend at Icahn Enterprises, grabbed a new stake in EchoStar. 4.35 million shares, top 5 in his $9.1 billion setup. Dumped some like Bausch Health, going defensive on communications and satellite tech. Q3 buy. Icahn spots turnarounds. EchoStar's merger with Dish could be huge. Ken Griffin at Citadel Advisors. Massive boosted Meta platforms by 12,693%. Now a key AI holding in his $60 billion plus beast with over 7,000 positions. Heavy tech tilt in dips, Q3. Griffin's quant magic sees Meta's ads and Reality Labs undervalued at 25 times earnings. David Tepper at Appaloosa Management went contrarian. New stake in AMD, 950,000 shares, 2.8% of $7.4 billion, big increases in American Airlines and Whirlpool. Betting on travel and consumer rebounds, Q3. Tepper loves distressed assets, AMD's chips fuel AI. Stanley Druckenmiller's Duquesne family office. New stakes in Amazon, Meta, and Alphabet, $437,000 of AMZN shares in his $4 billion pot. Exited MSFT and Lilly for focus, plus emerging markets via EEM. Macro wizardry at work, Q3. Bill Ackman at Pershing Square. No major new buys, but held Alphabet at 19% of $14.6 billion, minor trims elsewhere. Concentrated style. Patience wins. Sometimes holding is the move. Paul Tudor Jones at Tudor Investment upped SPYS and PETF for broad bets, added gold miners like GDX. Hedges volatility in his $10 billion setup, Q3. Dollar cost into SPY, ultimate copycat for growth. 3 big takeaways. 1. Volatility is your friend, pros buy when fear peaks. 2. Diversifying via ETFs to mirror without risk. 3. Tracking 13Fs on sites like Yahoo Finance for free alerts. Comment your top pick below, subscribe for weekly stock market and crypto insights, hit the bell. Thanks for watching, let's build that edge together. See you next time.